Greetings all, Ben here, East West. Just thought I'd have a little look at Bitcoin. I haven't looked at it for quite some time. If you do like what you see, then can you hit the like and subscribe, because it lets me know that this is worth doing. If there's not a lot of action, then I just won't do it. So if this is something of a bit of use to you, then go ahead and hit those buttons. It gives me a bit of a clue that I'm on the right track. Nonetheless, I'll just jump into it. Just looking at this on a big picture, I just think at this stage, I haven't really done much with this, because whatever's going on through here that we've sort of been going on for the best part of a year hasn't been very clear. Even though we have progressed and we have rallied slowly, the structure's starting to build up, and I'm just wondering if there's something just starting to brew up here. So the first thing I'll do is I'm just going to bring in an Ichimoku cloud. I'll just switch this to candles and bring in an Ichimoku cloud, because it looks like there's something just developing here that it's of interest. Now, when we bring in this weekly cloud, we can see here that this week we're just on the verge of closing above the cloud, and that has not been the case since the start of 2022. Maybe you could say here we had a week in the March 2022, but point being, it's a long time since we've been on the other side of this cloud. Now, the way I read these clouds on these big pictures, especially on a weekly, is that this big red thick cloud down here basically represents the power and the strength of the sell-off that we had from the all-time high. Now that we're getting on the other side of that, what that means to me is that enough time has gone by for the market to have digested that rally. Okay, so all this sell-off, that digested the sell-off. So all this sell-off and all the time it took to find our bottom, the cloud is now telling me that enough time has elapsed that we can expect that this bottom now is in, and that we are set to start rallying again. Now, that's just an expectation, of course, not a guarantee. And we don't know, because no one has a crystal ball. We don't know that the bottom doesn't give way again. I don't think it will, but of course I could be wrong. However, if we can just break this cloud on a weekly closing basis, and I'd probably even look for next week to just still maintain outside the cloud, I just think that's quite a bullish signal in the bigger picture going forward. And then I would just hope that the market, at least over the rest of this year and into next year, can just hold these sort of mid to high 20,000s and potentially push on and reclaim this high here, which is just shy of 32, where we've got a flat cloud there, and that's where the peak is. So this is a good development. It's not a guarantee, but it is a good sign that things are just, that enough time's gone by that we can start to leave the after effects of this sell-off in our rear vision mirror. So just moving back out here, the one thing I do like here is that the RSI, here it's come through, and even though it's sort of double topped here at 60, which is where a bearish market would usually resist the RSI, we've broken through, which is great. But what I do like is we've come back here, and thus far we've held 40, like the bottom here is 45. So the way I'd read that is that in a bullish market, you would want the RSI to travel between 40 and the overbought zone, like that. That would, to me, suggest that the market's got nice bullish momentum behind it. The reverse is true in a bearish market, where I expect the RSI to travel between 60 and the oversold zone, which would mean that the sellers have the momentum. But we're not seeing that. We're seeing the early stages of a good bull market here, okay, where the RSI holds 40, okay, and it travels up. So that's a good sign. We like that. That's not a bad thing. Now, also that the true strength indicator is just thus far holding above double O, which is it's just another confirmation signal that this is on the move. Well, not so much on the move, but it's doing enough to maintain the bullish stance of the market. That's how I'd say it. I mean, you could go a step further here and just like bring in a simple MACD, and you can just see that we're just starting to roll over here, and we're just doing enough to start to get the MACD. Even though we had it here, we've had our little correction, but this is just starting to give us a little bit of bullish momentum. Now, like I said, the back of the downturn, we didn't break 40, so that to me is a good sign. So that's just the kind of indicators I'm just looking at to help give me a bit of confluence in the decision making. Okay. Now, pushing that aside, I just think that what you can do at the moment is just focus on this emerging trend channel. So obviously, we had this sort of deviation down here below the trend channel, and we had a little poke through it here. But I like how this is sort of lined up here, and then this is kind of lined up there. So we can't expect a perfect trend channel. We just got the deviation, but these tops line up quite nicely to give us this quite clean line. And even though we've had a little flick through here, so maybe you could even adjust that like that. But I think that the bottom side of this trend channel is not going to be as important as breaking through the top side. So that leads me into the next phase of my analysis, which is the rarely popular Elliott wave look at this whole thing. Now, as I've stated, I'm not really calling this an impulse as yet. It's got the makings, and maybe you can make a case for 5 waves up here, but it's a pretty ugly looking thing. But I think the general premise that we had 5 waves with a big correction for a 1, 2 is valid, but we just need a bit more confirmation here. And remember, on a weekly, we need a bit more confirmation here that this was the starting leg of an impulse. And I'm not even comfortable to call this a 2. I think that's still a little bit iffy. I mean, maybe we might even just do something like that to make some sort of 2 wave, but that would kind of, and you know what, maybe that means that you've got to widen the channel out, and that's how that plays out. But I'm not leaning at that yet. And like I said, since whatever's happened off the low here, I'm not really confident that we've got a good impulse going, and it's not enough for me to call it an Elliott wave pattern. But the one thing I'd just be looking at, putting it aside, is that if we are going to get a third wave up here, what I want to see is price to get outside of this trend channel to the upside. So that's why I think, love it or hate it, you can even just put the Elliott aside. In fact, let's just put it aside. And I think that what you want to look for is the acceleration of trend outside of this channel. Okay, so if we start getting this steeper run, then you're coming back and going, yeah, okay, well, I can put the case together, and this is looking okay. Now, there'll be a million ways and a million different ways that people put this together, put the whole thing together, that they'll disagree, and that's fine. I don't care what your view is. Just have whatever view you want. This is just the way I'm looking at it. But put all that aside, and you just want to see an acceleration outside of that trend. I think that's the big clue that we're onto something here. So even just looking at this, basically, you probably don't need me to point out that we've just got a zone here that we need to break through, sort of in the $30,000 to $32,000 range. I mean, that's pretty obvious, and you could probably even go back and tie it into a bit of that, and you might even be able to expand it out to that. But that, this is just classic support, broke, resistance. But, the more times we tap this, the more chance I think we've got of busting through. So that would be the first point of call, which is just obvious to everybody. And then secondly, what I do, even though some people also don't like Fibonacci, I would still bring in a retracement here, because I think that the basic areas of retracement sort of line up with where would be the next sort of structural point that you would expect the market to test and react at. So, it's really pretty simple to me at the moment. You can put aside all views and all Elliott wave and whatever you want. I just think that we've got a trend that has tapped resistance. We're looking for this to get through before we just look for a reaction into the next area of structure, and that just remains lined up pretty nicely here between 42,000 and 48,500. So maybe we get above this and then we retest from above, and that holds, and that would be good, and then we can go up and get that. But that might take, I don't know how long it's going to take. It could take years. I don't think it'll take years, but I think the US dollar has got to do something. It's got to turn around to really help this keep going, and we're not seeing that at the moment. But that, just I don't think you've got to make it any more complicated than that. It's just bare basics. We've got a trend. We just want to see this support broken, and then we can go on and challenge the next, this resistance broken, then we can go up and challenge the next level. So that's where we sit. I just wanted to make this quick. Like I said, if that was helpful, great. Just hit the like and subscribe, and I'll do it again. If I get no traction, I won't bother. I won't waste my time. But anyway, best of luck, and we'll see you next time. Bye for now.